That Great Business Show, officially Ireland's top business podcast, crowned UCD Smurfit's Business Podcast of the Year.
Welcome to episode 264 of That Great Business Show. On this, our first video podcast in 5 years of the show, a really big reaction to our chat on 263 with TCD Provost Linda Doyle, who was talking about that big surge in applications from US students trying to get into Trinity, and she detailed how Trinity can help your business. It is a great listen. We're going to go to the States on this episode as we check out Pittsburgh and what it has to offer Irish businesses, and invest like a pro. An Irish startup wants you to have access to opportunities that the VCs have kept to themselves until now. That Great Business Show is powered by De Facto Shaving Oil, the all-natural shaving oil that means you can use it anywhere on your body. Totally safe, made in Mayo, sold online to the world, defactoshave.com. Now, I've mentioned it here on many occasions, the great mystery as to why investing isn't a mainstream topic in Ireland. It is in the UK, and it's practically an obsession in the US. Here, nah. This reluctance to invest is sometimes put down to the boom in the oil shares in the 1980s that went bust and cost a lot of people a lot of money, or the Aircom float back in the day, which also cost a lot of people a lot of money. But frankly, I don't believe that. I just think that there has been a woeful job done in teaching people about how to invest. Enter Shuttle, a fintech startup authorised by the Central Bank of Ireland, given to give investment opportunities to what they term professionals or ambitious professionals, that allows people to also to play like, and they put it this way, large VC or venture capital companies with curated drops where Shuttle introduces 2 new opportunities per quarter onto their platform. Well, that's the promise anyway. Well, they've just been approved for funding from Enterprise Ireland's HPSU programme. They will be applying for approval from the FCA in the UK shortly, and then it's on to Europe. Meanwhile, they're here in studio. Shuttle's founders are Rob Halligan and Scott Ashmore. Scott, Rob, welcome to That Great Business Show.
Thanks for having us.
Great to be here.
The pair of you have no background particularly in this. How come you chose this of all the businesses you could do? Who wants to talk to me about that?
Yeah, I think
that's right.
It wasn't a case. It wasn't a case of coming from this space or this world. It was a case of being a consumer who was looking for access to these opportunities and being disappointed and frustrated at the fact that we couldn't get access to them. We both worked in tech. We were both investing in other asset classes like public equities and cryptocurrency and whatnot.
Crypto. Don't talk to me about crypto.
Once upon a time.
Anyway, back, sorry.
And because of our work, we were relatively close to some very interesting and exciting venture-backed technology startups. And as a result, we wondered, is there an opportunity for us to invest in opportunities like these? And there wasn't. Certainly not in the way that we wanted to, certainly not that felt simple and safe, and just wasn't the experience that we could find. So we thought there must be other people like us. Let's find out if there is. And if there is, maybe we should build it ourselves.
But there are many people very like you, say of your age group, I'm going to guess, who are investing small.
Yeah.
But there isn't this mass movement that you will have both in the UK and the US. As I said, it's like a tsunami over there. It's so big. Everybody talks about their 401ks and their IRAs and everything else like that. And it's a daily obsession. Here, you may as well, there is more likely to be talking about club football results than investment.
Yeah.
Why?
Yeah, I mean, I think you alluded to at the start of the conversation there, like a lot of bad things happened a few years back.
It's about 100 years back.
I know, but I think it just tarnished a generation to just avoid investing, and therefore the education for investing just didn't happen. They just avoided it and said, oh, that doesn't make you money. Put your money in property or whatever it is. So it just took a back seat, and then it hasn't seemed to come back around since then. But
I think we're a conservative, risk-averse nation as well in many ways.
I'd love to think that, but then look at the horses, look at everything, betting company. That we're mad for a bet, and nobody seems to understand that you lose betting. But I don't get it.
People love a punt, all right, but I think it's people view this and as they should differently, and I think it's more of a lack of education, like you mentioned there. There's just hasn't been that education, whether it should be in school or wherever, it should be implemented, just a general understanding of finance. And that's something that we're missing. Now, I don't know if that's something that they're providing in the US or the UK to a higher degree than us, but the markets there are just far more mature in their thinking.
I'd say there's more a chance of hell freezing over than to see investment being taught in school in Ireland, whatever, which way. I think people see it as the devil's work to be investing, etc. Anyway, sell me, please, Shuttle. Tell me why anybody should go on to Shuttle. The microphones, plural, are all yours for the next few minutes.
Yeah, well, I think everyone should be... Personally, I think everyone should be investing to some degree. And I think that it's coming on leaps and bounds in the last few years, particularly with the kind of iPhone era, if you will, the applications that are now available that make investing easy and accessible.
You're talking about Revolut.
The Gyro, all of those.
Yeah.
And we're seeing, because of the dissemination of information as well, it's just so much more accessible. People are just naturally more educated on these things because they're taking it upon themselves to go out and figure it out. But it's also become cultural now over the last decade or so. It's already massively so in the States, but now we're seeing that kind of make its way across here as well. It's being discussed in the WhatsApp groups and the friend groups and online and on social. It is everywhere.
Would your pals on WhatsApp be discussing investments with you?
Not in my core group, but yes, I have been a part of WhatsApp groups where it is focused on investing, or those conversations are happening offline, in person. So most definitely. But it's also it's all over social media. People are talking about investing, whether it's in cryptocurrency like you scorned that, or if it's something else. I think tech as an industry and its boom over the last whatever number of decades has also had a massive part of this, because working in tech has never been more popular. Everybody wants to work in tech. And if you do work in tech, whether that's a startup or whether it's a public company, you tend to get stock options in your company. Now, all of a sudden, everybody is an investor in these companies. They're all owners and they're all sharing in the success of these businesses.
Or failure.
Or failure of the, or nothingness of those businesses. But that kind of, that pulls people along, and that kind of helps to expand their education and financial literacy. So I think that is also a part of that. So for Shuttle, for us, we were investing together. Like I said, we wanted access to more opportunities. It's step one, investing in, an ETF or an index fund or whatever it might be. What's the next step after that? How can I get access to other opportunities that might be higher yielding and could potentially give me, bigger returns?
And as you may or may not know, and it's only slightly of relevance here, I have a background in stockbroking once upon a time, and I take a huge interest in this, and I understand flows or deal flows and where they come from. How come the pair of you could get good deals coming through? Because there's one of my favorite phrases in investment is that no good oil deal ever left Texas, which means all the good deals are kept to people themselves. The bad deals are given away. How come you guys are getting good deals?
Yeah, well, the benefit of getting regulated by the central bank meant that we spent a lot of time networking, building relationships with VCs, with angel investors, people just generally within the ecosystem. So by the time we launched, we had a great network of people. And I think the way deals work in Europe is quite different to America. In America, a VC will generally take the entire deal for themselves. In Europe, it's much more collaborative. So there might be a company raising 2 million. The main VC will put in 1 million, and then the rest will be made up of smaller angels or maybe other smaller VCs. So it's a very collaborative ecosystem. So by knowing the right people, we're able to get ourselves access to great deals, because we're only a small ticket investor. Like at the moment, we invest probably 50 to 100K into a deal. A deal might be raising 4 million. So there's plenty of room for people to come in.
And by 100,000, you're talking about across your platform. In other words, not just the pair of you.
Of course.
Yeah,
It's all your co-investors or whatever.
Yeah.
Okay, so what's the minimum ticket that you are going to do for an individual? What's the smallest amount?
250 per quarter.
Euro. Okay.
So
So you have the website, and this 215. The projections on the website are very, very nice. If you invest, I think it's 2043, that if you put in 43,000 or something, you'll be able to retire.
yeah, based on historical averages. Yeah.
Oh, is that I was looking at that saying, oh, that's pretty impressive. Before you do anything, take professional advice. I'm not going to get myself up to the high court.
Yeah.
So back to the deals. Where are you getting the deals? It's all very well to say, people. Everybody in Ireland knows people.
Yeah, well, I mean, that's the name of the game, networking. So you meet somebody, you might meet a VC or They'll introduce you to a founder. You'll invest in that founder. They'll introduce you to all their other VCs. They'll introduce you to more founders. So it's really networking is the name of the game in this business. So the more people you get to know, the more access you have to good deals.
And you, the pair of you, are not fond particularly about crowdfunding because, again, there's a big long piece about crowdfunding on the website, which is worth reading, and it's fair points made about the more deals that come through in crowdfunding that you can't do due diligence, which begs the question, are you guys doing due diligence? And for those who don't understand that term, it means digging into the company. Are you doing the due diligence?
Absolutely, yeah, of course, yeah, absolutely. So we have a multi-stage due diligence process and background checks on the founders in the company, as well as we also go out to our network, that network that Scott mentioned of, subject matter experts, of other investors, founders, whatever it might be. And we also leverage their experience and opinions to help us create a broader picture of the opportunity and whether or not we feel it's a good fit for our customers, whether it's on thesis for the platform. And importantly as well, we only invest or only expose our customers to opportunities to invest in opportunities where there is a venture capital fund also investing and leading the investment round.
So they're kind of doing the groundwork for you?
Well, they are also doing a institutional level of due diligence of their own, so alongside ours. So it's not a case that we're just leveraging theirs. We're making sure that our customers are investing alongside these institutional players.
And why would they bother to have the likes of you in? I mean, if you say raising 2 million and you're coming in with the last 100,000, it almost sounds like it's an irritation. It's too difficult to even to bother to make that phone call. No? Yes? No?
Where it's incredibly simple for founders. We make it very easy for founders. Our whole process is very lightweight and straightforward because we understand as founders ourselves the difficulties of raising money, how much time, what a time sink it can be and pull you away from the business. So we make it very, very easy. We're also building a community of very interesting people, right? So all of the people in our community tend to be people working in technology or tech adjacent industries, relevant skill sets, relevant experience, relevant networks. These people could be decision makers in future companies that they are targeting as customers. They could be future hires. They could be people who could lend their advice, feedback, experience to help these startups to progress. So there's power in the community. It's not just a case of capital for capital's sake. It's capital. It's access for people who wouldn't necessarily get access to opportunities like these, but those people are more relevant and more powerful than people often let on.
And it is a business, so the pair of you have to make a living out of this. And am I right in saying it's 2% of the gross invested and 20% of the upside? Is that what you're...
No,
I'm wrong. I didn't read it properly. Not for the first time. What is the correct one?
So that would be the typical fee structure in venture capital. Yeah, 2% management fee per year and 20% carried interest. We don't do that. We also don't charge startups fees for receiving investment through our platform, which is kind of the typical traditional crowdfunding model. So we charge a subscription fee to the investor, to the customer, to get access to the platform and get access to the curated deal flow.
And
so
how much is that?
€250 per year.
Per year?
Yeah.
That's okay.
So a little over €20 a month if you break it down, and you're getting access to institutional level venture capital opportunities. So we think it's very reasonable.
And you're up and running now a year. Have you had any
less,
investments so far, and has anything gone really well for you? You don't have to name names, but I mean...
Yeah, we've done 6 investments so far. We've invested alongside the guts of maybe 20 VC funds across Ireland, the UK and Europe, and some that invest globally as well. So we've done very well in terms of getting into some really interesting deals. We're about 9 months operational. We're getting ready for our investment number 7 and 8 next month as well. So things have gone really well in that regard. Startups are a long-term asset class.
That's very well pointed out on your website.
Yeah.
Don't expect £1 million overnight.
No, this isn't speculative cryptocurrency, where people try and bet and get in.
Going back to that word.
This isn't liquid public equities that you can get in and out at the drop of a hat. This is long-term investment.
As well is that longer term, mid-term even, and it's something I've raised with other people, is trying to exit out of these. There isn't the exit mechanism because the Irish Stock Exchange has not actually done its job in trying to, I keep talking about it, but they haven't found a way of helping people like you raise small equity, go into the next level. What do you do? I mean, at some stage you're going to your investors are going to start saying, how do I get out of this?
Yeah, I mean, well, we're very upfront about the fact that it is very long term, and there are not going to be many exit opportunities until 7 to 10 years. There's obviously there's always situations where there's opportunities to exit along the way. There might be another funding round that's happening, and we could have an option to sell some of our shares that we bought. But for the most part, what we are big proponents of is that you shouldn't be investing a huge sum of your portfolio into this asset class. This should only take up a small amount, and you should understand that this is going to be held for the long term. So don't invest anything that you're going to want to be taking out for quite a long time.
Obviously, at some stage, you're going to have to grow and grow and grow. So will 2 investments per quarter be enough for you? Or can you, some stage you're going to go 4, 6, 8 per quarter? Or what's what's in your head, the roadmap for that?
Yeah, so starting with 2 per quarter, which has been working well. Of course, as we scale, the goal is to increase that. It could be, 2 a month, 4 a month, whatever it might be. I think what's really important is we're never going to let the volume override the quality of deal flow. So what's more important is getting access to good quality opportunities. If that means keeping it relatively low, that's absolutely fine by us. We don't want to play the volume game because that's when quality starts to nosedive. So it's really more about quality over quantity. But in terms of long term, it's about giving people access to more opportunities within the space. Can we get access to invest directly in VC funds or other private market asset classes and expand the product offering? So it's not just about sticking to we're investing on a deal by deal basis. How can we expand that? How can we give people greater access to the asset class? And maybe that's by investing directly in VC funds.
And I love you for one reason particularly is you've already decided that you're going to go abroad and you're going to get off the island, one of our big beliefs, and you are going to go to the UK. When do you head to the UK? Or, I mean, you have to get approval, I know, but that's soon, isn't it?
Yeah. So we've already had discussions with the FCA. They're aware of our intentions to submit an application this year. So yeah, hopefully by all going well, early next year, we'll be authorised by the FCA. We've already hired somebody based in the UK that will kind of spearhead that authorisation process.
No, but it's not that you have the pitch all to yourselves. There are plenty of other opportunities. And then when you get into the UK, there are many, many many competitors there. How are you going to differentiate yourselves, show that you're bigger, better, brighter?
Well, I think the market that we're in, while much more mature in the UK, there's no big player doing exactly what we're doing. There's smaller companies doing similar things. So I think there is a big opportunity to win that market.
There was a guy called Neil Woodford. Do you remember? Did you ever read about Neil Woodford? He decided that he was such a brain of investment that he knew best. And he had a massive billions under management. And he decided to put them into his money into unquoted companies. And guess what? It went bust. And this Mr. Woodford still owes a lot of people a lot of money. So, there are huge players who were dabbling and still dabble in that end of the market. So it'll be tough, I'm guessing.
It'll be tough. We don't want to see ourselves as like the allocator. We want to build a technology that enables allocation of capital, connecting people who want to invest with people who have investment opportunities. So it's...
How would you describe yourself? So therefore, you're not investment advisors, obviously. Are you just techies, tech bros? Pals of Elon Musk? That's a no, I think.
No, I wouldn't call ourselves that. Just technology that's unlocking access to people who deserve access to these type of investment opportunities. If we can build that technology to make that happen, it's obviously very network driven initially, but as soon as we get that kind of critical mass of people within the network, then it'll become highly
simple
technology
math
driven.
would suggest that you need a minimum of 1,000, maybe 2,000 people to make it a viable business for you guys. Would that be right?
No, I think like at our current scale, we could get away with under 1,000 people. But obviously we want to scale bigger.
Well, 250 times 1,000. I was doing the simple maths divided by 2, and that you have some overhead somewhere.
Yeah.
So that you'd probably need 2,000 people.
Yeah.
Are you all island yet? You can't get into Northern Ireland until you get FCA approval. Is that right?
Yeah,
That's
well,
right.
Because we're regulated financial services, we can't target from a marketing perspective people outside of the EU.
Yeah.
So we can't target the UK, including Northern Ireland. But if people find us, that's fine. If they come across us, that's fine. We've had people from the UK expressed interest, but for now we're locking everyone out until we're authorised.
And how are you going to get people to get to know you and find you? What's everybody's out there beating the same drum of we are brilliant and we are the marketing, the investment experts, etc. How are you going to differentiate?
Well, it's really about creating a great experience for the end user and then beating the drum as loud as we can in as many ways as we can. We're not trying to be an investor. We are a distribution network or a distribution infrastructure for people to get access to opportunities, as Scott mentioned. So it's about creating that platform and that experience for people.
I've just had a thought, because you just told me a short while ago that your background was in big events. Have you got any big events that you can actually promote the platform with? Are you going to run competitions or anything like that? Or are you even allowed to run competitions? And I don't know the answer. Just wondering.
Yeah, we'd have to ask our head of compliance that.
Yeah.
No, because you haven't hired that, because aren't you hiring? You are
they're locked in and ready to go, yeah.
Oh,
so
they have found, because I think it's still up on your the website or LinkedIn or
serving their notice period at the moment.
Congratulations to whoever who has just joined you as head of compliance.
Yeah.
So looking at how quickly will you scale? Any ideas, any feel for it? I mean, you obviously have chats over cups of tea or whatever you do, and you say 2 years, 5 years, when do you think you'll be huge?
I mean, the goal is within 5 to 7 years, we'd like to be across the world.
Retired?
Yeah,
we'll
all
see.
gone well.
When we do plan on raising a large institutional round of funding next year.
Oh, are you?
Yeah.
That's interesting, yeah?
Yeah.
And who might back, when I say who might back that, what kind of backers are you looking for that? Are you looking for US, UK, US maybe, more likely?
It's
Potentially.
Yeah, potentially US. Certainly across Europe anyway, outside of Ireland.
I think some strong fintech or consumer-focused VCs based out of Europe, UK and Europe would be ideal. To have a second fund potentially from the US in there would also be very strong, would lend itself to how we scale. Obviously, the US is a target, or at least should be a target for most startups this side of the water. It's a different regulatory landscape that we have to figure out. And that's kind of, I guess, one of the things when you're playing in regulated fintech or regulated finance, something that's always front of mind is, it's not as easy as just building something, not that it's easy, and then going out and trying to sell it. There's a lot of red tape. There's lots of, things you need to take into consideration before you attempt anything. So whether it's, we're authorised with a CBI, that allows us to operate across the EU, which is fantastic. The UK is a different story. The US is another story again. So it's...
Well, as I have told you both on and off air, I'm mad keen that Ireland starts investing and learns investing. It is not the devil's work or anything. It's actually both interesting. It's a brilliant hobby, actually. And, small amounts of money. It's a great way of passing the day and thinking that you know better than the market. Frequently you don't. And it goes wrong. And so therefore, say it again, take professional advice. I presume both of you read my email, because there is a final question that I ask everybody. At least one of you is nodding. Both of you, Scott and Rob, who would you separately, because it's not just one, I want a hire in a heartbeat. So we'll, Scott, what about you?
Yeah, I've thought about this one for a little while, actually. All the people running through your head, these famous entrepreneurs and really interesting people. But I think ultimately, and this is probably going to sound cheesy, but it'd be my wife.
Actually, you wouldn't be the first person who has tried to get the wife or the partner or the girlfriend or the boyfriend or whatever on board, yeah?
Yep.
Why? Oh, you better name her and give her full name.
Yeah, her name is Annabelle Ashmore. She's just I've never seen somebody work so hard, give their all to the company they work for. Sometimes
she's not working with you at the moment.
No, not yet. Anyway,
yeah.
But yeah, her work ethic is just unparalleled. I've never seen anybody just pour so much of themselves into their work.
Annabelle. Rob.
I hadn't seen the question, so you have caught me off guard. You caught me on the hop a little bit.
No, because everybody has somebody. So you're probably interested in sport and somebody, and just say, such and such a manager, I'd love to have him, her working with me or something like that.
It's kind of one of those things. It's like there's so many people that have different skill sets.
But what do you need immediately? Cash.
Yeah. Someone with deep pockets. No, I think, and again, I'll probably get in trouble for my wife now for not saying her name. Thanks, Scott. But I think this is probably equally as cheesy, but I'd probably say Scott because I've known him for 25 years.
Oh, that's fair. Go on. They're touching hands there. That's lovely. Actually, I'll go back to radio days. I had in studio with me they were girlfriend and boyfriend at the time, and they were all nervous. And they sat there holding hands.
Very cute.
And they were running a business. And it was just a little tear ran down. It was lovely. So do you want to hold his hand?
I might. Well, we do regularly enough. We walked in here together. So. I've known him for 25 years. It's been incredibly easy to, on that side of things, to run a business together because their trust is already there. A lot of the questions that you might have to ask in the early days of finding a co-founder are already answered. You know each other so well. It just makes life a lot easier.
Well, long may it last.
Absolutely.
And another lovely thing about the pair of you, because this is what you told me earlier, is that both of you have to run away, but you have to pick up your kids.
Yeah.
That is the true life of the entrepreneur.
Yeah.
Raising cash, going to VCs, and collecting the kids from school. So that's it.
Yeah.
Rob and Scott, will you please come back to me when you have gone to the next level, when you break into the UK, or send me, please, any of the businesses that you're trying to raise cash for. We'll have a look at them ourselves and put them through our little grill and see if they're worthy of investment. But otherwise, Shuttle, Shuttle, is the name. Shuttle dot.
Joinshuttle.com.
So join as in join it. Yeah,
Yep.
We'll find you.
All one word.
Yeah.
Okay, $250 a month or a year, should I say?
Yep.
Sounds good to me. But then you have to put the money in after that as well.
Of
Of
course.
course.
But you know, it's right. Actually, there's always a final question, isn't there? Just out of curiosity, because I don't know the answer to this, are there tax breaks for anybody investing? As a personal investor putting money onto the platform?
Sometimes there is, sometimes there isn't. It depends on
If it's EIS or
Yeah,
DIIS or whatever it's
Ireland's
called. Yeah.
not amazing at that, unfortunately, and hopefully it will improve. But yeah, it's a
Okay.
case-by-case basis.
Okay. Well, talk to your professional advisor and all that good stuff. Rob Halligan, Scott Ashmore, thank you so much for joining us on That Great Business Show.
Thank
Thank
you.
you,
Thanks for
Conor.
having us.
Revolutionize your shave with De Facto, changing the face of shaving. A few drops of De Facto shaving oil and add water. That's it. You get the smoothest, closest shave ever. No mess, no waste, just pure, all-natural skin protection that hydrates, lasts longer and feels incredible. De Facto shaving oil. It's for anyone who shaves. Made in Mayo, loved worldwide. Available in selected pharmacies and at defactoshave.com.
Next, we're traveling 3,500 miles away to Pittsburgh, Pennsylvania, and that is because the Pittsburgh's Allegheny Conference on Community Development has sent its crack team over to Ireland to sell the Steel City as a location for your business. Matt Smith is one of the team, who also happens to be a former state senator, a lawyer, and his current job is to attract global firms, investors, and talent to the Pittsburgh region, and importantly for us, to explore how Irish companies can form strategic partnerships, joint ventures, we like JVs, or even open a presence in Pittsburgh. And I see our pals at Aer Lingus who carry our podcast on board their long-haul flights look like they may, I only say may, have direct flights to Pittsburgh sometime next year. So that would be very nice because that would make Pittsburgh even more attractive. Matt Smith, welcome to That Great Business Show.
Great to be with you.
Sell me Pittsburgh. Where is it? It's 3,500 miles away. It's far, far away.
Pittsburgh is a great city. We actually cover the entire Pittsburgh region, which is 10 counties of southwestern Pennsylvania. But Pittsburgh is a great location to make investments, the entire region. There's a couple of reasons. One is if you're looking to attract talent, it has a very low cost of living and high quality of life. We are very unique relative to cities our size for the cultural attractions we have, the sports teams.
Let me be rude. If it's
Yes.
a low cost of living, that means nobody wants to live there.
No, it's actually quite attractive place to live. That's why I always say the cost of living is paired with the high quality of life. So we have the cultural attractions that are amazing, and primarily because of our industrial past, companies that existed. Andrew Carnegie bequeathed significant assets. The Heinz family, the Mellon family, all of those assets still exist in the form of cultural assets.
Do you know that Carnegie, gave us libraries here? There are many Carnegie libraries in Ireland.
And as there are in Pittsburgh. And
Yeah.
so that's you could not build the Carnegie Library system of Pittsburgh or the museum system in today's dollars if you wanted to. And so we have that asset because of Andrew Carnegie's investment. So there's ties back to that kind of industrial past that we have in the Pittsburgh region. that makes it really unique, particularly from a cultural, high quality of life standpoint.
Heavily dependent in those days on steel. All gone now, more or less, or is it gone, or is it coming back?
It's actually not gone. I mean, we just saw significant investment from Nippon Steel in partnering with U.S. Steel, and so that investment in the Pittsburgh region is going to mean multiple billions of dollars of investment into existing facilities, as well as a research and innovation center that will be housed in Pittsburgh and that will be really integral for Nippon's efforts to invent the new form of steelmaking in the United States. And the key point there is the point that I like to make is, just to go back to Andrew Carnegie, about 100 years ago, Andrew Carnegie innovated the steel industry by bringing the Bessemer converter to the Pittsburgh region. That was
the Bessemer converter.
Bessemer converter.
Every day is a school day, so teach me what is or what was the Bessemer converter.
It was in those days, that day and age, it was a new form of steelmaking. And so what I like to point out is Carnegie innovated steelmaking 100 years ago. With this investment from Nippon, we're going to invent and innovate in steelmaking in Pittsburgh 100 years after Carnegie did it. And that's happening across the board in multiple sectors. And so, steelmaking is very much alive and well in the Pittsburgh region, as is manufacturing. And we think we're really positioned with a lot of the measures that have occurred at the state level in Pennsylvania to be really attractive to manufacturing, large-scale investment as well.
But I presume that's the more attractive thing, large scale. In Ireland, we have 250,000 very small companies, but 250,000, many of whom want to expand and love expanding into the States. What is the attraction for them, or what would it be to go to Pittsburgh? What can you do for them? What would they find there, besides the lovely cost of living and all the cultural stuff? But for hardcore business, what's in it for them?
Yeah, there's really a couple things. So if you take a step back, the core sectors where the Pittsburgh region has innate strengths are really four sectors we focused on: AI and robotics, which, because of our university system, Carnegie Mellon University is literally where robotics and artificial intelligence was invented in the world, certainly in the United States. So we have that asset within that sector. Two, manufacturing. We have a significant base of manufacturing in Western Pennsylvania because of our legacy of making things. And so we know how to manufacture. We know how to take critical minerals and turn it into manufacturing and build things in the Pittsburgh region. Manufacturing also requires sites. And we are blessed to have a significant number of larger industrial sites that 20, 30 years ago may have housed something like a coal-fired power plant, but those are being now converted into other uses, other industrial uses. So manufacturing has a significant value proposition in the Pittsburgh region. And then two others are energy. Energy is a significant need globally. You see data centers coming online. You see large industrial users that are going to require power that we're not producing right now globally, and we're certainly not producing in the United States. The Pittsburgh region has multiple assets, but two that I would cite that we really have innate strengths in are natural gas and advanced nuclear. So we have the headquarters, the world headquarters for Westinghouse, globally branded company, legacy company. They're doing amazing things in the nuclear space, from small modular reactors to micro reactors to larger reactors. And so nuclear is a really significant asset. And then natural gas, we actually sit on one of the largest reserves of natural gas in the world in Western Pennsylvania. And so that's an asset that will go directly into those sites that I talked about to provide power generation for manufacturing, for data centers, for all the users. And then the fourth one, just real quick, is life sciences, because I think that's an important one for Ireland. Life sciences is a significant sector growth area for the Western Pennsylvania space. So I think life sciences really is uniquely situated to sync with Ireland's strengths as well.
But of those that you just run through there, they all sound like big ticket to me. And there's no Irish company going to compete with Westinghouse or with this small nuclear reactors, or I'd be very worried that you might take back some of your own chemical and or drugs companies, because that's what's going to happen eventually, I presume. So you might be taking those away from us, not joining with us to do joint ventures or something like that. What is there, again, for an Irish company? What are you looking for? What types of companies that could thrive in Pennsylvania?
Yeah, where the value prop comes in for an Irish company is not so much competing with a Westinghouse or some of those other companies. It's the supply chain opportunities. And so we think that manufacturing operations that are part of the supply chain or the electric grid supply chain in Ireland, those companies could be really well situated to invest in the Pittsburgh region because they're going to have those large end users there, like a Westinghouse, like a U.S. Steel, where those companies can come in and be part of the supply chain in the Pittsburgh region, where they know there's going to be a significant capacity for growth, not just because of the strength of the Pittsburgh region, but where the world is headed in each of those sectors.
Now, I'm going to get into the weeds here because I now think, say I was a supplier to Westinghouse, must I be based in the States to serve them? I know certainly in the U.S. Defense Forces, you've got to have an operation in the States before you can service it. With a private company, probably not. But I'm sure there's some endless tendering system because of the size.
Yeah. I mean, what we see a lot of in the Pittsburgh region is, companies that form landing parties, if you will, within the Pittsburgh region, where they establish a base of operations and they build out the relationship. They develop the connectivity. They develop those university partnerships with schools like Pitt and CMU. And so that's where I think we've seen companies come in and maybe they don't bring a whole division in, or maybe they don't bring a headquarters in, but they bring a landing party in. That will then what we're able to do, particularly with an organization like the Allegheny Conference, is take those companies and really make those connections, build them into the community, make sure that they have the connective tissue to the universities, to those private sector end users, the political leaders, certainly when it comes to incentives or other things that are really important. Permitting is also really important in that space. And so we're able to build that connective tissue. So I think it would behoove a company, even if they weren't legally required to make that kind of investment, to become part of the community, whether that's in the Pittsburgh region or otherwise, another place. But we think the Pittsburgh region for those sectors is really well positioned.
I heard one word there, incentives. Are there incentives from the state, or what is available to somebody in Ireland who wants to go abroad, to go and live in Pittsburgh and base themselves there, expand there?
Yeah, one of the things that we've really focused on the last couple of years, and I would give a lot of credit to Governor Josh Shapiro, Secretary of Economic Development Rick Steiger, they've completely transformed state government in a bipartisan way, working with the General Assembly to make Pennsylvania a healthier host for this kind of investment. So where that leads me to is a reduced corporate net income tax. We're going to go as a state from one of the worst and highest corporate net income tax rates.
What?
It was 9.9%. So we were the second highest.
That's not bad. We 12.5% in Ireland, so that sounds all right. But I'm sure there are other taxes because there's always other taxes in the States.
This is why we want to talk to the Irish companies, right? Because Pennsylvania is taking that 9.9% rate and phasing it down to 4.9%. So we're a very, very competitive as a state. And then we have the federal tax rates as well. But as a state, Pennsylvania is really competitive.
I knew there was another tax. So the federal one comes and whacks you in the back of the head.
Well, the federal one actually from this latest act for the big, beautiful bill from President Trump and then the Tax Cut and Jobs Act, that rate is now very, very competitive. I think that rate is down to like 21% right now.
It was 21 compared to 12. That's not good.
Yeah.
Plus 4 because you'll be at 4.5. So
but
it all adds up.
Yes. And I think the tax rate issue from a state perspective is really important for us because it allows us to compete with other states. So you have that as a healthy host condition that is now being put into play that is making us competitive. The other big thing from the state end, and this gets to the incentive question, is the state is now aggressively going out and marketing the state, doing business development. And as part of that, they're putting real incentive packages on the table in a way that's very aggressive and that is a clear break from prior administrations. And so again, I think the governor deserves a lot of credit, as does the General Assembly, because the governor recognized when he was elected back a couple of years ago that Pennsylvania wasn't competing. We were not competing for these large-scale investments and opportunities, he recognized things need to change in Pennsylvania. This is going to blow your mind. Pennsylvania, for the first time within, I think, probably about 18 months ago, developed a long-term economic development strategy. Pennsylvania had not done that for, I think, 30 years. And so this team came in and said, we need to actually develop a strategy, and we can't just spread it like peanut butter across the state, right? We have to really lean into those sectors that we view across Pennsylvania, certainly from our perspective, the Pittsburgh region. Where should we be winning? Where should we be putting those dollars?
Well, Mr. and Mrs. Smith, that is you and your wife,
yes.
You have big, deep roots into Ireland, so you know the Irish scene very well.
Yes.
What would you say to an Irish company, any type of company in Ireland that Pittsburgh needs, that we can produce, that we should be either manufacturing over in Pittsburgh or exporting to Pittsburgh, but, to start the ball rolling? Have you, while you're sitting in the shower, the bath, whatever, have you ever thought, there's an opportunity there? Like my good friend Tom Murphy and his de facto shaving oil that I've just given you.
Yeah.
Is that possible? What does Pittsburgh need?
Yeah, I think the big thing is, from a need perspective, companies that fit within those sectors, and then where there's a cross-section across those sectors. So, for example, the nexus of AI and energy is a space that the Pittsburgh region is very well positioned to address needs that Irish companies have. And so if you've got a power generation need, the Pittsburgh region, as I said earlier, is really uniquely positioned to provide that.
But your power's over there. We have a massive deficit of power here, and we have to build more data centers, so it's going to get worse and worse. But you can't ship your power over here unless we buy your lovely nuclear reactors, which I presume is what we will do eventually.
Yeah, I think that's one potential solution. So the nuclear reactors that are exported from the United States, from companies like Westinghouse, going into Ireland. I think the other really, really unique thing for the Pittsburgh region that's attractive to companies is our location. We are within half a day's drive of about 40% of the North American population. We are very well positioned. So if you're an Irish company that is looking to get your product, your end use to market, the Pittsburgh region is a very, very good place for that, because of the water access, because of the rail access, and then because of our physical location and where it is within the United States and the connectivity that we have to other markets. So that strategic location for Irish companies that are looking to enter the North America market, Pittsburgh is a really attractive. And again, I do think it's important to emphasize low-cost environment. We don't have the same burdens and hurdles that the coasts have when you want to enter the market. And it's a really accessible market.
But again, because of your heritage, you know that Ireland's default is, first of all, New York, then Boston, then possibly Chicago, is because that's where we tend to zip to. If you were putting those onto the table there, and I said, why would I choose Pittsburgh over those ones? New York, at least I understand, because it is so expensive.
Yeah.
But our friends in Connecticut will do it for a third of the price of New York. Boston, everybody loves Boston. It's such a lovely city. What am I hearing about Pittsburgh?
Yeah, I think it goes back to the cost differential. We're much lower cost than the states that we've mentioned that are East Coast states and West Coast states. So you have that significant difference, I think. You also have in Pittsburgh, it's a market our size to have 2 Tier 1 research institutions, Pitt and CMU. So they are R1 research institutions, which means they spend a certain amount of money that qualifies them, and they have the technical expertise to qualify as an R1 institution. There are very few, if any, markets in the United States that are Pittsburgh size that have 2 R1 research institutions.
And what benefit is that to an Irish company?
So the talent is number one. The talent that is produced at Pitt and CMU, and not just the volume of talent, but the highly specialized talent in sectors that are going to be critical for growth over the next 20 years globally. So, not to beat a dead horse, but when you think about AI and energy, those universities are producing the exact talent that you as a company are going to need to integrate AI into your operations or robotics into your operations. CMU is really uniquely positioned not just talk about robotics and AI, but they have a history of applying robotics into the field. And so if you're a company in Ireland and you're thinking about, how do I deploy AI? How do I deploy robotics within my operation? There's not a better market and talent base in the United States than Pittsburgh. And that's just a fact with what they're producing. So I think they produce that talent. Then the second key point about the universities is the innovation ecosystem that creates, particularly in and around those universities. And so we like to point out a map, where close proximity to Pitt CMU, there are innovation companies, there are manufacturing companies, energy companies, AI, that are physically situated close to Pitt and CMU because they want to access the professors, they want to access the talent, they want to access the innovation that's occurring on those campuses.
And can you actually access them? I know it's the theory, but can I pick up the phone or walk in off the street and talk to these people?
100%. And it's one of the key strengths that the Pittsburgh region has, not just within the universities, but within our corporate community, within our political community. Pittsburgh is a very accessible city. And so what I mean by that is it's accessible physically. So you can walk from one end of downtown Pittsburgh to the other in a way that you really can't, certainly in a lot of larger cities in the United States or even cities the same size as Pittsburgh. The other way it's accessible is you can access talent, professors, university partnerships at Pitt, CMU, or other universities in a way that you just can't in other markets. And I think that's a really critical access point.
So if anybody wants to get in contact and go and talk to the professors about AI, about robots, about lots of the good things, who do they get on to? Do they get on to Matt Smith or do they get on to whom?
Yeah, they would contact us. They would contact me and we would put them in touch with the right people at the University of Pittsburgh or Carnegie Mellon University. And, what we found is those universities, not just those two, but all universities in the Pittsburgh region, are really eager to have that partnership because that's always been the secret sauce, if you will, about the Pittsburgh region.
No, the secret sauce came out of Heinz.
That's yes, very much so. We take pride in that.
Had a huge Irish connection with Tony O'Reilly.
Yes.
So we all know about Heinz and all. Final question, you do know this because I hope you got the email about who would Matt Smith hire in a heartbeat? Did you see that question?
Yes.
Oh, good.
Yes.
Because a lot of people don't.
Yes. Yes.
So who would you hire in a heartbeat?
Who would I hire just in general
or for your team? We always look for people who would, looking for, it says a lot about you. You might choose a rock star. You might choose a football star. You might choose your wife. You might choose anybody, really.
I would actually choose Bono.
Would you?
And the reason is, not just because I'm a huge U2 fan, which I am, but, part of our work, at the Allegheny Conference and what we do in the region is selling the region, selling the narrative of the region, right? Like it's great to sell all the points, the tax, the incentive, the hard numbers, the talent that we're producing, all of that stuff is great. And we can sell that, every day and every night. The key part that I've seen, what companies, whether they're Irish-based companies or companies from around the world in the United States, what they want to know is what's the narrative? How do I fit into the narrative within a region? And I think Bono, better than most people, maybe any other people, is able to craft that narrative and tell the story. He's a storyteller at heart.
He is par excellence, as they say.
And so I think being able to tell that story and how that story fits into what the value proposition is for the Pittsburgh region.
I'll give him a buzz and tell him he's hired, okay?
Absolutely. I'm not sure we can afford him, but he
doesn't need the money.
That's a good point. That's a good point.
That is Matt Smith of the Allegheny Conference. And you will find Matt, I found you various places, but you're easily found on LinkedIn, correct?
Yes, absolutely.
And so we chase him down there.
Yes.
And he'll give you loads of money and loads of introductions and lots of... Matt, thank you so much for coming into us on That Great Business Show, because that is it for episode 264 of That Great Business Show. As you know, it's officially Ireland's best business podcast, because we are brought to you thanks to De Facto Shaving Oil, made in Mayo, sold online to the world. It is the world's best shaving oil. It is not a beard oil. It is for anyone who shaves, no matter what parts of you shave, and it's all natural, so you can put it anywhere. Do please repost us on LinkedIn. Do nothing else. Don't give us likes or anything else. They are useless. Give us reposts, please. And if you want your business to feature on That Great Business Show, find us on the aforementioned LinkedIn. Do have something interesting to tell us, though. We do get many, many offers every week. On Vision today was both Lee Brennan and Richard Ryan. Later on, Ireland's Viscount of Vision, Dublin South FM Station Supremo, Peter Riceco's full test card to make sure we are the best looking podcast on the planet. And as always, I say thank you, studio. For me, Conal Moran, buchas to you all, agus slán tamil.